Hey guys, it's that Dividend guy. Today we're going to be looking at the Kiplinger list for Warren Buffett stocks ranked, the Berkshire Hathaway portfolio. The Berkshire Hathaway portfolio is a diverse set of blue chips and increasingly lesser known growth bets. Here's a look at every stock picked by Warren Buffett and his lieutenants. Warren Buffett stock selections don't look how they used to. The Berkshire Hathaway equity portfolio has undergone a lot of upheaval over the past few years. For one, Berkshire Hathaway's investment arm has gained a taste for growth plays. While old guard favorites such as American Express and Coca-Cola still hang around, Buffett and Co. have taken a shine to stocks such as Apple and Amazon.com and even lesser known firms such as Snowflake and Stoneco. But the Berkshire Hathaway portfolio also has gone through several haircuts over the past year or so. Buffett trimmed or cut dozens of stocks as the COVID-19 pandemic drastically altered the investment landscape. He owned several airlines at the start of 2020. Now he holds none. Banks were aces among Buffett's stocks to begin 2020. Buffett spent the whole year kicking them to the curb. Well, it's 2021, and Buffett hasn't stopped selling. Buffett broke out the broom yet again in the third quarter of the year, trimming or outright cutting 10 positions. Meanwhile, he only replaced the outgoing stocks by adding 2 positions and initiating 2 new stakes. That's according to the most recent Form 13F regulatory filing submitted to the Securities and Exchange Commission on November 15th. If you want to know which stocks legendary investor Warren Buffett feels are worth his time, attention, look no further than the Berkshire Hathaway equity portfolio. And as always, remember, a few of these Buffett stocks were actually picked by the portfolio managers Todd Combs and Ted Weschler. So not every stock in the portfolio is Buffett picked. He does give some leeway to his investment managers. And I'm sure Munger has some say in some of these plays as well. So it's not just Buffett, guys. Keep in mind that he has other people that help him invest, and he does trust both Todd and Ted to make investment decisions. I'm sure they run them by Buffett, but a lot of the tech plays have been speculated to be them and not Buffett himself. All right, so starting on this list is UPS. So he owns 59,000 shares, but it's just such a small percentage of the portfolio, 0.00004% of the portfolio. The world's biggest package and delivery company continues to be the smallest position among Warren Buffett stocks. It hangs by a thread, but it has done so for quite some time. More than 15 years, in fact. Perhaps the reason Buffett hasn't ditched the stock is that he doesn't even notice it anymore. At fewer than 60,000 shares, it's a rump position. Leftovers an odd lot. It's certainly less than what Buffett started out with. UPS stock was added to the Berkshire portfolio during the first quarter of '06 when Buffett added 1.43 million shares worth about 113.5 million at the time. That comes to an average price per share of right around $73.38, but UPS never grew to be a major part of the Berkshire Hathaway portfolio, and Buffett has pared the position over the years to where it wouldn't be a surprise if he exited the stake at any time. He's also been characteristically quiet about the stake. There's no mention of UPS in CNBC's Warren Buffett archive. The UPS stake has been a long-time disappointment, with the stock delivering a total price plus dividends return of 321% since he bought it versus 398% for the broader market. It has at least outperformed since the COVID lows. That's some solve for Buffett and Co. Next is a S&P 500 index. Warren Buffett's advice for most investors has always been simple. Buy an S&P 500 index fund, and while you're at it, throw a little money into treasuries to help you sleep well in down markets. But for years, it's always indexing for thee, but not for me. The market's most celebrated stock picker kept on doing what he's always done, picking stocks and not indexing a single dime. Buffett finally took his own advice in 2019, however, buying not one but 2 S&P 500 trading exchange-traded funds. First of those is American's first ETF, the S&P 500 Trust Etf Spy. Spy tracks the 500 components of the S&P 500 index. It does so for an extremely reasonable fee. While many use it to buy and hold, its high volume makes it a popular tool for traders as well. It's great that Buffett finally put his money where his mouth was, but if we're being honest, it's a strange position for a man who actively is trying to beat the index. After all, an ETF merely tracking an index will actually underperform slightly once the costs of the index are included. Who knows? Maybe Buffett really just wanted to drive his long-standing point home. Next, we have another index fund. How serious is Buffett about index funds? Well, he brought the subject up again this year at Berkshire's meeting, saying, I recommend the S&P 500 index fund and have for a long time. Perhaps that is why, in addition to SPY, he also bought the Vanguard S&P 500 index, ticker symbol VOO, back in 2019. For the most part, VOO is pretty much the same product as SPY. Both funds track the components of the index. Both funds are extremely liquid. The most significant difference is the price. VOO has just a lighter fee, a slightly lighter fee. But when you add together Berkshire's investments and the two tracking funds, you start to realize those investments probably are largely symbolic. Each stake represents roughly 1/100% of Berkshire Hathaway's equity holdings. Next, we've got the fallen darling in Wells Fargo. So he has been trimming banks like crazy because the Fed was putting limits on the amount of capital that they were allowed to technically invest back into themselves. They froze dividends. They said no buybacks for banks. But Wells Fargo had that huge scandal a couple years back, and I just think Buffett lost his faith in this bank. There are two other banks that I'm sure are on this list, being U.S. Bank and Bank of America, and he has added to those stakes. I believe he added to Bank of America, but I believe he did cut a little bit of U.S. Bank, but nothing close to what he's done with Wells Fargo. So, Wells Fargo, which has been in the Berkshire portfolio since 2001, was once considered amongst the most treasured of Buffett stocks, but it turned into a weight around the oracle's neck starting in 2016 when numerous scandals bubbled to the surface. The bank opened millions of phony accounts, modified mortgages without authorization, and charged customers for auto insurance they didn't need. The cleanup process has been slow, and it has claimed not one but two CEOs. Wells Fargo stock, meanwhile, has lagged its peers for quite some time, so Buffett started selling, first a little, then a lot, to the point where Wells Fargo has been regulated to the portfolio seller. Berkshire sold off WFC shares in numerous quarters since the start of 2018. However, for several quarters, most of these sales appeared to be routine pairing of the position to keep it below a regulatory 10% maximum ownership threshold for banks. Then came the hacksaw. So this kind of explains exactly what's been going on. So Q4, Buffett dumped more than 55 million shares, minus 15% of the position. Then Q2 of 2020, Buffett sold another 85.6 million shares, a 26% drop since then. Then in Q3, it went down another 85.6 million shares, down 46%. And then Q4 of 2020, he unloaded another 70 million shares, 58%. And then Q1 of 2021, Buffett made his deepest cut yet, selling off 51.7 million shares, or 98.7% of the remaining position, all but eliminating Wells Fargo from the portfolio. If there's a saving grace, is that he's left the remainder alone for a couple of quarters. Nonetheless, within about a year, Warren has gone from one of Wells Fargo's largest shareholders to owning an insignificant slice of the pie. So guys, Wells Fargo was one of the biggest stakes in the portfolio, and if you watch any of the Berkshire meetings after, I think it was like 2016, right? It was when the scandal happened. He's been questioned every year about Wells Fargo and what he plans on doing with it, and I think, he just finally got sick and tired of those questions, and he lost faith in the bank. Like, let's be honest, like if you're a financial institution and your reputation goes down the toilet, like Buffett's always said, you can lose money at Berkshire, but you can't afford to lose a shred of reputation. And if that happens, he said he's cut executives or would cut workers or something. Like, if you lose reputation for Berkshire, he's done. So if he's like that with people, I would expect him to be like that with companies as well. And Berkshire did not want to be, obviously, with those huge cuts, they did not want that black cloud of the Wells Fargo scandal to be over their heads for the rest of their investment career. So obviously he's lost a lot of faith in Wells Fargo. It's such a significant slice of the pie now, it doesn't even register. This was one of Buffett's biggest positions, guys. And it just goes to show that just because an investment was great for you in the past doesn't necessarily mean that it's always going to be great. Now, I do think Wells Fargo is going to turn it around. First of all, I know that the scandal has dropped their profitability. It's dropped their reputation immensely. They cut the dividend. They were hurt pretty significantly when the Fed froze banks, essentially. But I'm sure Warren Buffett shredding those shares has really tarnished the reputation. I mean, it's one of those things that, like, if the best investor in the world wants to hold your stock, you should take pride in that. And I think Wells Fargo is really, as a company, is seeing how influential Buffett actually is. Every time, like I said, every time he was asked about this company, I bet it left a bad taste in his mouth. Like, how can you sit here and defend a company and leadership that literally just looked the other way when it came to, it said faulty accounts, they gave people insurance they didn't need, they were messing with mortgage loans. Like, I know that they were opening faulty accounts to get incentives, so they incentivized the wrong behavior, but they knew about it longer than they publicized, and then they let it go on, and it became a huge issue. So, I mean, I don't blame Buffett for shedding this stock. I owned Wells Fargo for a while in my own portfolio, but I just lost faith as well. So I wouldn't be surprised to see Wells Fargo completely cut. It's hard because this is one of those stocks that him and Charlie have talked about for decades. Like, they've held it since 2001. So they owned this stock for 20 years, and all of a sudden, just bam, they got sick with it. They got sick over it. They lost faith in the company. So, guys, it's a good lesson that just because a stock does good for you for 2 decades does not mean that it's always going to be a reliable performer or a trustworthy company. It's one of those very few reasons why Buffett cuts his stock, and I'm glad that he did, because this was a poison to the portfolio. Next, we've got Mondelez. So this is one of them that I've actually looked into myself. They own Oreo cookies. They own Chips Ahoy. They own Chicken and a Biscuit, Nabisco. So they own a lot of really iconic brands. But again, it's the same percentage as Wells Fargo. So let's take a look. Another meager position that survived another quarter is Mondelez, whose brands include Oreo cookies, Cadbury chocolate, Halls cough drops, Trident gum, and Triscuit crackers. Me, myself, of course, when I was looking at it, the big brands that I loved are Oreo and Trident. In 2007, Buffett invested in what was then known as Kraft Foods. The packaged food company changed its name to Mondelez in 2012 after spinning off its North American grocery business, which was called Kraft Foods Group and traded under the ticker KRFT. Kraft Foods Group later merged with H.J. Heinz in 2015. Deal backed by Buffett to form Kraft Heinz. A couple years later, in 2017, Buffett shot down speculation that Kraft Heinz would buy the global snacks giant. Berkshire Hathaway maintains a significant stake in Kraft Heinz. More on that in a bit. Mondelez, not so much. Berkshire isn't even among Mondelez's top 100 shareholders, at just 0.04% of Mondelez's shares outstanding, according to data from the S&P Global Market Intelligence. And Mondelez is a nothing burger among Buffett stocks, accounting for just 1/100% of the total value of Berkshire's equity portfolio. The tiny position did hold up well during the bear market as investors added some consumer staple stocks for defense, but Mondelez has put up more modest returns since the stock got back into gear. All told, Mondelez shares are up just 10% since February 19th, 2020. The market top, while the S&P 500 has delivered more than a 42% in total returns. Next is Procter & Gamble. So, guys, both of these stocks, I do own Procter & Gamble, but I did look into Mondelez. It's one of those situations where I love consumer staples, but the dividend just isn't there for me when it comes to Mondelez. But Procter & Gamble is one of my exceptions. So it's a very small position, 0.02%. But Warren Buffett is clearly fond of the Dow Jones stocks, which can be found throughout the Berkshire Hathaway portfolio, but Procter & Gamble is one Dow component that has fallen by the wayside as a Berkshire Hathaway investment. Buffett came to own P&G, maker of Tide detergent, Crest toothpaste, Pampers diapers via the holding company 2005 acquisition of razor maker Gillette. At the time, Buffett, a major Gillette shareholder, called the tie-up a dream deal. Procter Gamble became one of Berkshire's biggest equity positions. The dream didn't last long. The Great Recession eroded the pricing power of old-line consumer staples companies such as P&G. The company embarked on a plan to shed 100 underperforming brands. The Duracell battery business happened to be on the list, and Berkshire bought it in 2014 in exchange for P&G stock. 2 years later, Buffett paired with what was left of the P&G stake by 99%. He hasn't added to the position since. While this Buffett stock is almost phased out, P&G did prove a helpful holding through the bear market and early on in the recovery. However, like many defensive stocks, P&G shares have largely underperformed over the past few months. So guys, honestly, this is one of my absolute favorite stocks, consumer staples. I don't think that it's hard to say. I don't think Buffett's going to be shedding this position. He loves Gillette. If you watch any of the older Berkshire meetings, like I think 95 to like 2000, this is, I believe, before it was bought. Yeah, so it was bought in 2005, and I do remember him talking about that. I've watched every Berkshire meeting like 3 times at this point that are publicly produced anyway, or publicly available. So I've watched them a lot, and Gillette and Coca-Cola are the 2 businesses that he always talks about. And then, of course, National Indemnity and Geico, American Express, he talks about as well. But prior to the Procter & Gamble buyout, he talked about Gillette and Coca-Cola hand in hand. So it is one of my personal favorites, and I know it is not a huge Berkshire stake, so I'm happy to own this one. But yeah, this is one of my personal favorites, and when it comes to the portfolio, is Procter & Gamble. Next, we've got Liberty Latin America. Over the years, Berkshire has made several de facto bets on legendary pay-per-view mogul John Malone. The initial appeal to Buffett was his portfolio managers' his plan to understand game knows game. Liberty Latin America provides cable, broadband, telephone, and wireless services in Chile, Puerto Rico, and the Caribbean and other parts of Latin America. The multinational telecommunications company, in which Berkshire also holds a stake, issued tracking stock of its Latin American operations in 2015, then spun off those operations entirely in 2018. More recently, in November of 2020, Liberty Latin America closed its nearly $2 billion purchase of AT&T's wireless and wireline assets in Puerto Rico and the U.S. Virgin Islands. In August 2021, it completed the acquisition of Telefónica's TEF wireless operations in Costa Rica. There hasn't been much action as of late. Buffett has left the position completely untouched in 2021. Next is J&J. Like fellow defensive stock Procter & Gamble, it's fallen out of favor with Buffett and represents nothing more than a token holding. So now we're to 0.02% of his portfolio. Playing the diversified healthcare giant's history of headline-grabbing faceplants, J&J struggled with manufacturing problems and allegations of illegal marketing practices in 2010 and 2011. Buffett was critical of the company for those gafes, as well as for using too much of its own stock in its 2011 acquisition of device maker Synths. Disenchanted with Johnson & Johnson, Berkshire dumped most of its stake in 2012. Berkshire's position in J&J topped out at 64 million shares in 2007. Today, the holding company's equity stake comes out to just 327,000 shares, which represents roughly 1/100th of the shares outstanding. That position has vastly underperformed the market and has rebounded out of the COVID lows. Its shares have delivered a 54 total return, but the S&P has more than doubled. Floor and Decor, it's a new position. So, Warren Buffett initiated a stake in Floor & Decor Holdings, which is very much in keeping with some of his other investments in home retail. Floor & Decor sells hard surface flooring and related accessories primarily through 133 company-operated warehouse store formats. Buffett bought more than 816,000 shares in the company, worth more than $99 million. It's a small position, to be sure, accounting for a meager 0.03% of the Berkshire Hathaway total portfolio, but it still fits nicely with some of Buffett's other holdings and investments. For example, it's been building a position in home goods retailer RH, formerly known as Restoration Hardware, since the third quarter of 2019, and he's made no secret of his love for Berkshire Hathaway's wholly owned subsidiary, Nebraska Furniture Mart. That company is insane. So Nebraska Furniture Mart, that is slowly and surely becoming one of the biggest staples in Buffett's portfolio. It was ran by Mrs. B, who you should know that name if you've watched any Berkshire meetings. She's a legend. She's insane. Like this woman, I'm reading a Buffett book right now, and he's talking in one of the Berkshire meetings. He talks about this too, but she actually had tags on her stuff at home, so she felt more at home in the store than she did at her actual house. So she kind of converted her house into what the store would be like. So she was a grinder. She came over with nothing, built the biggest furniture store, I believe, in North America, to the point that big box retailers and other at home furnishing stores didn't even want to enter the state. That's insane. So, yeah, Mrs. B is awesome. The Furniture Mart is phenomenal, and the Floor and Decor adding that just kind of helped with that. It kind of goes into that same space that the Furniture Mart is in. So it's definitely a business that Buffett and Berkshire know very well, and as you guys can see, they are more bullish on this company when it comes to percentage than they are on Procter and Gamble and J&J. So that really does say a lot. Next, number 32 is SiriusXM. This is 0.09% of the portfolio. A company that reaches roughly 100 million listeners via its core satellite radio business, and Pandora, which it acquired in 2018, is another Malone-related stock pick. Malone is chairman of Liberty Media, which owns a massive stake in SiriusXM. As Kiplinger has noted, it's possible that all of Berkshire's investments in companies that are somehow tied to Malone's truly business corporate structure could very well be responsibility of one of Buffett's portfolio managers. Liberty Media is a large position held by Ted Weschler's Peninsula Capital in his pre-Berkshire days. However, Berkshire's affinity for this position has been waning as of late. Buffett first bought the shares in Siri during the final quarter of 2016. Berkshire unloaded a small position of its SiriusXM position during the third quarter of 2017. Years later, in Q1 of 2020, he trimmed 3.9 million shares, or 2%, then really took out the hatchet during Q2 of 2020 by cutting more than 82 million shares, or 62% of the position. While he left the stake alone for a couple quarters, he brought out the scissors once again during the 2021's first quarter, shedding 6.3 million shares, or another 13%. He kept the position stable in Q2 and Q3 of 2021, however. Buffett remains the fourth largest owner of Siri stock at 1.1% of shares. That's well behind Liberty Media's 78% stake. Next is Stoneco. Big dip in price. Brazilian financial technology firm Stoneco provides software and hardware for companies to facilitate credit and debit card payments, and it has been one of the growthiest Warren Buffett stocks since Berkshire entered the position in 2018, at least until lately. Its shares have more than doubled in 2020 to easily outdo the S&P 500's 18% return, bringing Buffett's gains since the end of 2018 to 355%, but the stock has since gone ice cold, shedding 64% of its value year to date, and shares are now underperforming the S&P 500 by more than 30 points since the start of 2019. Still wonder then that Buffett took some profits during the Q1 2021 sell-off, roughly selling 3.5 million shares, or 24% of the stake. Given the relatively small position in the company, the fact that that it's a fintech company, you won't be surprised to learn the position was initiated by Buffett Lieutenant Son Combs, with the Oracle of Omaha's blessing, no doubt. But while Stoneco isn't necessarily in the Buffett stock's blueprint, it fits very well with Berkshire Hathaway's general bullishness on companies that facilitate and process payments. Payments are a huge deal worldwide, Warren Buffett said at the Berkshire 2018 shareholders meeting. And the company is still growing like a weed. 2020 total payment volume, TPV, jumped 62.5% year over year to over 209 billion Brazilian reals, and revenues were around 30% higher to $3.3 billion in Brazilian reals. Next is Marsh Mclennan. So, Berkshire Hathaway has plenty of insurance exposure in its core operations, including Geico, Gen Re, LMIC Insurance, and Berkshire Hathaway Specialty Insurance, among others like National Indemnity, but the industry has never been a major factor in the equity portfolio. Indeed, the company dumped what was left of its stake in Travelers in early 2020. So it's something of a surprise that Buffett not only bought into Marsh Mclennan's by the end of 2020, but expanded its position in Q1 of 2021. Berkshire initiated a $4.2 million share position worth just short of $500 million during Q4 of 2020. It wasn't a major position at just 0.2% of the total value of Berkshire's equity holdings, but by virtue of another 1 million shares or so purchased during the first quarter of 2021, the stake had increased by 23% in just a few short months. However, Buffett has had a change of heart lately, reducing the position by another 20% during the second quarter, then by another 34% in Q3 2021, leaving it with just 2.7 million shares. Shares in MMC, which provide various risk strategy and consulting services, are longtime market laggers. Perhaps Buffett sees untapped value. The company also pays a modest dividend yielding a 1.3%. So guys, if you have been watching the channel for any amount of time, you know that I am a huge lover of insurance because I follow Buffett. Studied the business model, love the business model. Marsh Mclennan is one of those that I have looked into. Just as it said, the dividend yield is 1.3%. It doesn't have a lot of growth history, so that's why I chose other options. But I do like the company, and it is one that I don't want to copy simply because Buffett does own it. As it said, he did dump his Travelers stake, and I actually own Travelers. I own 3 shares of the company currently. But I have tried to look through and find companies in the insurance space that Buffett himself does not own, but that still perform pretty well. So Marsh Mclennan is one of those that I have looked into, and I would have bought it if Buffett didn't initiate a position. Next is Teva, or Teva Pharmaceutical. So Berkshire Hathaway moved into TEVA stock during 2017's fourth quarter, and the company looked like a classic Buffett stock at the time. The Israel-based drug manufacturer was out of favor, but to put it mildly, a bloated balance sheet, massive layoffs, and the looming expiration of drug patents had short sellers licking their chops. By the time Buffett stepped in, shares were down 70% from their mid 2015 peak. Berkshire then doubled his stake in Teva during the first quarter of 2018. When shares really looked cheap. Problem is that they're still cheap. The shares have lost almost 45% of their value since the start of Q2 of 2018. They currently trade at less than 4 times analyst estimates for their future earnings, which is a fraction of the S&P 500's forward PE. But Berkshire has left the position alone for about a year. Its most recent move was a small 1% trimming. Buffett remains its 4th largest shareholder by virtue of its 3.9% stake in the pharmaceutical name. Next is Royalty Pharma, its new position. Healthcare typically hasn't represented a large percentage of Berkshire Hathaway's assets, but the holding company usually maintains positions in several of the sector's names. That's still the case following Berkshire B's exits in Merck in Oregon, and the Oracle of Omaha has decided to bring Royalty Pharma into his stable of Buffett stocks. That said, it isn't your usual pharmaceutical play. Its name might indicate focus on acquiring biopharmaceutical royalties. It doesn't research or develop drugs. It helps provide capital for the companies that do. As the company explains, we fund innovation in the biopharmaceutical industry, both directly and indirectly. Directly, we partner with companies to co-fund late-stage clinical trials and new product launches in exchange for future royalties, and indirectly when we acquire exiting royalties from the original innovators. Through that model, it's gotten a piece of blockbuster drugs such as Adbry's, Imbrica, Biogen's, I'm not even going to try that, and Pfizer's Xandy. Buffett spent $475 million to initiate a stake during the third quarter, immediately making him a top 10 shareholder with 3.1% of all shares held. But it's still relatively a meager position within the Berkshire Hathaway portfolio at less than 0.02% of equity assets. Next, we've got another insurer. This is another one that I looked into. Known as Globe Life, known as Torch Corp up until 2019, is another one of the small insurance-related holdings in the Berkshire Hathaway portfolio. GL is a life and health insurance firm. It might be a boring company, but it has a very, very quietly been a very good stock pick. Berkshire Hathaway has owned shares in Globe Life or Torchmark since 2001. In that time, it has generated a total return of 566%, outdoing the S&P 500's 504%. with dividends included. It owns 6.2% of Globe Life shares outstanding, which makes it the firm's third largest holder right after Vanguard and BlackRock. Next is T-Mobile. Berkshire bulked up on its exposure to the communications services sector during the third quarter of 2020 by acquiring a small stake in wireless communications company T-Mobile. Then Buffett literally doubled down on the bet during the Q4 of 2020, growing its stake by another 2.8 million shares, or 117%. T-Mobile is certainly a much more attractive investment since it closed its $26 billion merger of Sprint in April 2020. The deal created a real number 3 wireless company. These total subscribers are at least within the same ballpark as Verizon and AT&T. Shares, however, had a rough 2021, off 12% versus a total return of about 26% for the broader market. The 5.2 million shares, $670 million stake now represents roughly a quarter of the percent of the Berkshire Hathaway portfolio worth. That amounts to 0.4% of the stake's firm, making Buffett one of the firm's top 20 shareholders. Next, number 25 is Store Capital. Berkshire's position in Store Capital, which it entered during the summer of 2017, is an unusual one. Real estate investment trusts are a way to invest in real estate without owning the actual assets. It's never been a big name among Buffett stocks. Store invests in single-tenant properties, including chain restaurants, supermarkets, drugstores, and other retail services and distribution facilities. That's a way to say Store is a bet on brick-and-mortar retail, which is thought to be in a permanent decline. Buffett, however, spied value, and he spied it for quite some time. Store Capital CEO said that Buffett studied the REIT for 3 years before taking his position. The Oracle of Omaha must have seen similar value rise in the company's February-March dip, which sent Store shares off by roughly 65% from the peak. We say that because he bought 5.8 million shares in addition, or an additional 31% to bring his stake to 24 million shares, yielding 4.5% at current prices. Good news for Buffett, Store shares have returned 124% since the March bottom to the top, and the S&P 500's 115% return since then. Berkshire now owns 9% of shares outstanding, making it Store Capital's third largest shareholder after Vanguard and BlackRock. Next is RH. Warren Buffett has found a winner in RH, which many readers know as Restoration Hardware. Berkshire, which already is positioned in home furnishings via its Nebraska Furniture Mart subsidiary, added more exposure to the space. In his Q3 2019 entry into RH, which made a considerable addition to his stake to close out the year. The holding company has since topped up its position by 1% in Q1 2021, and 2% in Q2. RH operates 106 retail outlet stores across the U.S. and Canada, and it also owns Waterworks, a high-end bath and kitchen retailer with 14 showrooms. While brick-and-mortar retailers have struggled mightily over the past few years thanks to part of rising e-commerce, RH has found success catering to the upper crust, and that success continued throughout the COVID pandemic as Americans were forced to work from home and decided to spend on improving their environs. RH shares have almost tripled since January 1st, 2020, up almost 200% versus 49% for the total broader market. Shares are killing it in 2021 too, up 42% compared to the S&P 500's 26. It's hard to tell whether this is Oracle of Omaha's buy or a project of one of his lieutenants, Todd or Ted. Buffett has been mostly mum on the stock. Still, the stake fits broadly with the Oracle's worldview. Buffett stocks tend to be bets on America's growth, which is exactly what betting on housing is. Buffett currently is the RH's third largest investor by virtue of owning about 8.5% of all shares outstanding. Next is another insurance company that I also have looked into. London-based Aon offers a wide range of professional services from insurance and reinsurance to pension administration and financial advising to health insurance. And it's represented Buffett's lone new position in Q1 of 2021. Like most insurance firms, you won't necessarily expect profits to grow in a perfectly straight line year after year, but revenues have improved without interruption over the past 4 years, and net income is up in 3 of the past 5. That operational strength has led to superior returns against both the market and its peers. Its shares have provided a total return plus dividends of 605% over the past decade versus 354% for the for the S&P 500 and at 302%. Berkshire hasn't exactly bet the farm on Aon after adding 300,000 shares, or about 7%. This stake is still worth just 1.2 billion, or a little more than 0.4% of the equity portfolio assets. Nonetheless, it's one of the few stocks Buffett and Co. have been bullish on amid a torrent of quarterly sales. Next is Bristol Myers Squibb. Among Buffett's stocks, banks are the most notable for getting the axe as of late, but we should note that he soured on several healthcare plays too. It was one of the Bristol Myers Squibb was one of the big pharma bets Warren Buffett did during the third quarter of 2020. In the case of BMY, Berkshire took on almost 30 million shares worth over 1.8 million. Buffett grew even fonder of the company over the next few months. He tacked on another 3.4 million shares, growing the position by 11%. However, Buffett shed 2.3 million shares at the pharmaceutical giant during the first 3 months of 2021. In Q2, he dumped another 4.7 million shares, or 15%, and then in Q3, he trimmed yet another 16%. BMY beefed up in a big way a year ago when it acquired pharmaceutical giant Celgene, and that's likely was a big part of the initial attraction of the stock. The deal brought on a pair of blockbuster multiple melanoma treatments, the latter which also treats mantle cell lymphoma and myeloplastic syndromes. That's par for the course. A long track record of successful acquisitions has kept the pharma company's pipeline primed with big name drugs over the years. Among the better known names today are a blood thinner and Climaphage for type 2 diabetes. Next, at number 21, we've got MasterCard. Berkshire might own MasterCard, but Warren Buffett has given credit where credit is due, namely in his portfolio managers Combs and Weschler. Buffett's biggest regret is not pulling the trigger sooner. I could have bought them as well, and looking back, I should have. Visa and MasterCard in 2018, referring to his own investment in American Express. MasterCard, which boasts 974 million cards across the world, is one of the several payment processors that count themselves as Buffett stocks. That said, the position was a little lighter as of late. Berkshire reduced its position by 6% during the third quarter, bringing its overall weight down to 0.05% of the portfolio. Of course, MasterCard shares have returned 1,400% including dividends, since the March 31st, 2011, several times better than the S&P 500. So it's hard to begrudge Buffett for a little profit-taking. Besides, since then, he has left well enough alone. Next is AbbVie, which this stock is my best performer in my entire portfolio. AbbVie is yet another Berkshire Big Pharma bet. It was a big ad from Q3 2020, but it also has another healthcare stock that Buffett has been distancing himself from. It's known for its blockbuster drug Humira and Imbruvica, but analysts are also optimistic about the potential for Rinvoq and Skyrizi, which treat rheumatoid arthritis and plaque cirrhosis. And let's not forget about AbbVie and its big hit with its long-term dividend investors. A pharmaceutical company is a dividend aristocrat by virtue for having raised an annual dividend every year for half a century. Even better, its current yield is one of the highest in the S&P 500, and the company has raised its payout at an 18% average annual rate over the past 5 years. It's got a dividend of 4.8% and is several times better than the S&P 500's 1.3%. Most recently, Berkshire Hathaway has slimmed its position by 15%, 10%, and another 10%, and it accounts for 0.05% of Berkshire's equity portfolio, down from 0.08% at the end of Q1. Next is Amazon.com. It's been a winner for Warren Buffett for most of the time since he first bit into the e-commerce giant in early 2019. However, like other Amazon shareholders, Berkshire is putting up with a rare bout of underperformance. The holding company disclosed its position after the first quarter of 2019, then added another 54,000 shares in the next quarter. Shares are up 87% since the end of Q2 2019 versus 66% return from the broader market. That said, the stock is up just 9% in 2021 versus 26% total returns for the S&P 500. That's okay. If Buffett really feels like it, he can deflect the blame on one of his lieutenants. Even before Berkshire Hathaway submitted its regulatory filings for Securities and Exchange Commission, Buffett told CNBC that one of his fellows in the office that managed money bought some Amazon, so it will show up when that file is submitted. That said, Buffett has long been an admirer of Jeff Bezos. He admitted in an interview that he also copped to wishing he had bought the stock sooner. Berkshire holds an insignificant 0.1% of its shares outstanding to barely keep it within the top 100 shareholders. Interestingly, Buffett marginally reduced the position by 4,000 shares in Q1 2020, but he hasn't touched the stake since. Next is Snowflake. Warren Buffett made quite a splash in fall of 2020 when he finally dove headfirst into the Snowflake IPO. The chairman has said that he will never be a fan of IPOs. He has said so on record and has notably turned up his nose at most of the heavily hyped stock market debuts, but that didn't stop him from being involved in the Snowflake, when Snowflake, a cloud infrastructure unicorn, hit the public markets with a blockbuster IPO. It's a cloud data warehousing company that plays in roughly $55 billion annual market, the market that's expanding. The firm boasts nearly 5,000 customers, 116 of which are responsible for generating about $1 million in revenues within a 12-month period. Snowflake's generating a lot of hype because it offers a way for companies to run their software on various cloud platforms, be they be provided by Amazon.com, Microsoft, or Google, to name three. And the stock is heating up after a weak start to the year, outperforming the S&P 500 37% to 26%. Next is Visa. It operates the world's largest payment network and thus is well positioned to benefit from the growth of cashless transactions and digital mobile payments. Like MasterCard, Visa is the idea of Lieutenants Todd Combs and Ted Weschler. Buffett won't tell. Also, like MasterCard, Buffett wishes he had bought more. Buffett's Visa position got a little smaller in Q3. The stake in V was nipped by 4%. Berkshire Hathaway first bought Visa in the third quarter of 2011, and it has been proven to be a mammoth winner, including dividends. Visa's delivered a whopping total return of 964%, well more than double the S&P 500's total return in that time. Visa is also a dividend growth machine, ramping up its payout by 128% over the past 5 years alone. Visa accounts for a modest but not insignificant holding of 0.7% of Buffett's portfolio. Meanwhile, Buffett's 0.5% stake in Visa doesn't even put it among the top 25 investors. Next, at number 16, is Kroger. It's quickly one of the most favored among Buffett's stocks, with Oracle topping up his position by more than a fifth during the second quarter of 2021, after adding a huge chunk in Q1. Berkshire turned a few heads during the fourth quarter, when it initiated its 18.9 million share position in Kroger, but given what was to come, it now looks like a savvy pick. After all, the massive supermarket chain treated shareholders well during the worst of the pandemic and has continued to outperform. In 2021, indeed, shares are up nearly 37% year-to-date, with dividends included. It operates 2,700 retail food stores, operating under such banners as Dillion's, Ralph's, Harry Teeter, and its namesake brand, as well as 1,500 gas stations and even 170 jewelry stores, under banners including Fred Meyer Jewelers and Littman Jewelers. And Buffett is extremely interested in owning more of Kroger. Berkshire added 10.7 million shares, or 21% to his Kroger position in Q2, followed by a purchase of 17.5 million shares, a 52% increase in the position during Q1, with nearly 62 million shares total. Berkshire Hathaway is the third largest owner of Kroger shares, with its 8.3% interest coming behind only BlackRock 10% and Vanguard of 9.4%. It's only a middle-of-the-pack position, but just 8% or 0.8% of Berkshire's equity assets. But the old economy value play is a natural Buffett stock, right in line with the Oracle's traditional interests. Next, at number 15, is Verisign. All right, let's take a look. So, Verisign. Berkshire bought Verisign, an internet infrastructure service company that quite literally keeps the world connected online and acts as a domain registry for the .com, .net, and other top-level domains. During the dip in the final quarter of 2012, the company's dominance of the space exemplifies. Buffett loves Buffett's love of deep moats, and the stake has paid off well. It hasn't done well in the past year, up just 21% versus the 32% of the S&P, but it has raced ahead by 516% since the start of 2013, as well ahead of the S&P's 291 total return. 291% total return. It's also is a teachable example of how stocks aren't good or bad in a bubble. One investor's brilliant purchase often is depending on the timing, another investor's biggest failure. I'm not going to read all. Berkshire Hathaway currently is the largest institutional investor and owns a little less than 13 million shares, giving an 11.4% control in the company. 14 is Chevron. It's the only energy stock left in the Dow Jones Industrial Average after ExxonMobil was removed in 2020. It's also a sector sole representative among Buffett stocks, and Buffett can't seem to make up his mind about whether he likes or loathes the company. Berkshire initiated a position of more than 48 million shares in the fourth quarter of 2020, valued at $4.1 billion, although energy prices weren't expected to make huge moves in 2020. After a considerable rebound in late 2020, the outlook for oil and gas was much improved and expected to get better as the global economy recovered. Chevron specifically was well positioned as it took advantage of the worst of the industry's woes in July 2020 by acquiring Noble Energy, a $5 billion all-stock transaction. The company's scale, asset quality, and reserves make it one of the healthiest players in the industry, where a lot of players are on injured reserve. Most noteworthy is the 5% plus yield at current prices, and that stands out all the more given that a slew of oil and gas firms had to slash or suspend their dividend in 2020. Chevron, meanwhile, has raised its quarterly payout for 34 consecutive years, including a 4% improvement announced in April to $1.34 per share. And yet, Buffett reversed course in Q1. In addition to booting Suncor Energy from the portfolio, Berkshire jettisoned a little more than half of its Chevron position, unloading 24.8 million shares. He followed that up by dropping another 550,000 shares, or 2% in Q2, to bring the position down to 23.1 million. But Buffett flipped the script again in Q1, adding 28.7 million shares, or 24% to its position. This stake isn't nothing. It makes up nearly 1% of Berkshire's portfolio and is still a top 15 position. Meanwhile, at 1.5% of Chevron shares, Berkshire is the sixth largest investor. Next, we've got Charter Communications. Excuse me. It markets cable, TV, internet, and telephone and other services under the Spectrum brand, which is America's second largest cable provider behind Comcast. It's greatly expanded its reach in 2016 when it acquired Time Warner Cable and sister company Bright House Networks. It's also yet another Buffett stock with a John Malone connection, albeit a small one now. He served on the telecom and media company's board of directors from 2013 until 2018, when he stepped down to concentrate and focus on a smaller group of companies. He does remain a director, however. Excuse me. Buffett entered the position in the second quarter of 2021, but has seemingly lost his love for the telecom company in recent years. His position has been trimmed down from 9.4 million shares in early 2017 to just 4.2 million shares as of Berkshire's most recent 13F, including a million share reduction, or 19% in Q3. Charter remains a decent position in the Berkshire Hathaway portfolio at a little more than 1% of its equity. Next is Liberty SiriusXM Group. It technically has three different investments in satellite radio. Its leader is XM Holdings. Not only does it hold a slug of Sirius shares, it also has positions in two other different tracking stocks. Liberty has for years held a large stake in SiriusXM Holdings, but in 2015 the company actually recapitalized, offering, among other things, several tracking stocks that allowed investors to participate in the performance of Liberty SiriusXM investment directly, rather than get piecemeal through Liberty Media itself. While that stake has largely been left alone over the past few quarters, Buffett decided to amplify his Sirius bet by tracking on another 30 million or so shares, or a 35% bump from the second quarter. Berkshire is the largest institutional shareholder in each of the tracking stocks, holding 15.3 of Liberty SiriusXM C shares and 19.2 of the A shares. Number 11 is General Motors. When Warren Buffett first took his stake in General Motors in early 2012 and over the past few years, he became even more bullish on the world's fourth largest auto manufacturer by production upping Berkshire Hathaway's holding in 2018 and 19 and as recently as Q3 of 2020. But lately, Buffett has started to distance himself. Berkshire reduced its ownership in the car company by another 10% in Q2, or 7 million shares. That follows cuts of 5.5 million shares in the first 3 months of 2021 and 7.5 million shares during the final quarter of 2020. General Motors has always looked like a classic Buffett value bet. After all, there are fewer American brands more iconic than GM. He also has sung praises of the CEO on several occasions, and the stock primarily trades at a crazy cheap multiple of expected earnings. But with shares up nearly 260% since the COVID bottom, maybe it was time to take a little more off the top of a profitable investment, even if analysts still like the valuation and potential for resumption of income. There's a matter of allocation. Thanks to GM stock's strong price performance, it still accounts for almost 1.1% of Berkshire's total equity portfolio, down from 1.4% before Buffett's most recent trimming. Next is the Bank of New York Mellon. We're in the top 10 now, guys. Bank of New York Mellon truly stands apart from the back. Warren Buffett has been an admirer of the BNY Mellon for some time, and despite his dwindling love for banks, he has largely left his stake alone. He did trim the position a little in Q2 of 2020, but that's nothing compared to the heavy-handed haircuts that Berkshire's other bank holdings have suffered over the past few quarters. The Bank of New York Mellon is a custodian bank that holds assets for institutional clients and provides back-end accounting services. Its roots actually go all the way back to 1714 when the Bank of New York Mellon was founded by a group including Alexander Hamilton and Aaron Burr. Today, BK is the nation's 9th largest bank by assets, according to the data from the Federal Reserve. Berkshire Hathaway first took its position back in 2010 and has an estimated average price of $43.90. Since then, Berkshire Hathaway has become the bank's largest investor at 8.4% of shares. Vanguard is number 2 at 8%. Next is Teva at number 9. It was largely undisrupted holding in Berkshire Hathaway's equity portfolio, at least up to and until 2020, when Buffett snipped 1% of its stake. And kidney care provider and dialysis center operator. He cut it by another 5% in Q3. But Buffett so far has left the position alone in 2021. It serves patients via more than 3,000 dialysis centers in the U.S. and 9 other countries. Aging baby boomers and a growing population in many developed markets should provide a strong secular tailwind. Berkshire disclosed its initial position during the 2012's first quarter, given that it was a large position of Ted Weschler's Peninsula Capital. In his pre-Berkshire days, it wasn't unreasonable to assume that this was his pick. Weschler confirmed as much in 2014. For now, Buffett is Teva's largest shareholder by a country mile. Its stake of 36.1 million shares represents a little more than a third of the company's shares outstanding and remains the top 10 holding in Berkshire Hathaway's equity portfolio. Number 8 is U.S. Bank Corp. It's the nation's 5th largest bank by assets and the America's biggest regional bank. It's also one of the oldest Buffett stocks in the Berkshire Hathaway portfolio. He initiated the position in the first quarter of 2006. Buffett is notoriously tight-lipped about U.S. Bancorp, and at least historically speaking, has rarely touched the position, but he clipped it by another 1%, and another 0.06% and 1.1% in Q2 and 1 respectively. Scraping just a bit off of the U.S. bank stake stands in a stark contrast to what Buffett has done with so many of Berkshire's other bank stocks. However, mostly he's taken a hatchet to them, and it's not like the regional lenders' returns have justified holding on when Buffett has abandoned so many of its peers. True U.S. Bank's total return beats the broader market by 6.6 percentage points so far in 2021, but it lags considerably over the past 3, 5, 10, and 15-year periods. U.S. Bank Corp shareholders no doubt appreciate Buffett's vote of confidence. The holding company has an 8.5% stake and makes it the largest institutional shareholder. Next is Verizon. Verizon, the only telecommunications company in the Dow Jones Industrial Average, is a beloved staple of long-term dividend investors everywhere. That's why it looks so at home in Berkshire's portfolio, and Buffett is warming to it. Berkshire and Buffett initiated a brand new stake in Verizon of Q4 of 2020, picking up almost 146.7 million shares, valued at about $8.7 billion. In one fell swoop, the teleco accounted for a sizable 3.2% of Berkshire's total equity portfolio. But that position got a lot bigger in Q1 2020 as Warren Buffett added more than 12 million shares, improving the stake by 8%. Verizon's percentage of assets has slipped a bit, but still remains a hefty 2.9% weighting. Berkshire also remains the fourth largest owner of Verizon shares, behind Vanguard, BlackRock, and State Street Global Advisors. Bulls like Verizon for both its growth prospects in the area of 5G networking, its defensive characteristics, and reliable income stream that it delivers to investors. Number 6 is Moody's. Moody's is a business and financial services firm best known for its Moody's Investor Service credit rating arm, one of the three major American business credit rating agencies alongside Standard & Poor's and Fitch Ratings. It also offers financial analyst technology via Moody's Analytics. MCO is a long-time significant holding in the Berkshire Hathaway portfolio, and an ironic one to boot. He first dipped his toe in during the first quarter of 2001, and he's been content with his investment of late, leaving his 24.7 million share stake unchanged over the past few years. The funny thing about Berkshire's holding in Moody's is that Buffett said back in 2010 that our job is to rate credit ourselves. We do not outsource that to rating agencies, yet Berkshire Hathaway is the largest institutional shareholder, owning 13.2% of the financial firm. The holding is meaningful on Berkshire's end too, at nearly 3% of assets. Moody's is one of the top 10 Buffett stocks. 5 is Kraft Heinz. Warren Buffett is one of the driving forces behind the 2015 merger of packaged food giant Kraft and ketchup purveyor Heinz to create Kraft Heinz. It's Berkshire's fifth largest stock investment with a market value of nearly $12 billion. But it's been a dog, and Buffett likely still regrets his participation in what was one of the biggest deals of the past decade. Berkshire recorded a $3 billion non-cash loss from the impairment of intangible assets in 2018, arising almost entirely from the equity interest of Kraft Heinz. Buffett wrote in 2019 letter to shareholders that that in early 2018, KHC wrote down the value of its brands by nearly $15 billion. In 2020, Fitch downgraded the company's debt to junk status. Its second quarter earnings beat expectations, but Kraft still had to record yet another $2.9 billion in impairments. Kraft's operational performance has at least improved since then, but its shares have gone back to lagging the broader market. It still has a lot of catching up to do to shed its dud status in the Berkshire Hathaway equity portfolio. Kraft shares are still down more than 30% since September 30th of 2015. Berkshire Hathaway remains the company's second largest shareholder, with a 26.6% stake. Private investment firm 3G Capital, who teamed up with Berkshire in the 2013 purchase, tops it at 44.3%. And then this is my second favorite, but well, my favorite holding is Coca-Cola. Buffett is an unabashed fan of cherry Coke, starting investing in Coca-Cola stock soon after the stock market crashed in 1987. In his 88 letter to Berkshire shareholders, he's expected to hold onto the stock for a long time. Three decades later, it's proven true to his word. Berkshire is Coca-Cola's largest shareholder with 9.3% of its shares outstanding, and Coca-Cola remains among the most iconic of Buffett stocks. Coca-Cola made a brief appearance as a component of the industrial average. In the 30s, shares were added back to the Dow 87, and they've remained a stalwart member ever since. While Coca-Cola stock performance hasn't impressed its total 128% annual return over the past decade, as well, it's been behind the S&P's 354% return. It's been an income investor's dream. The beverage maker has increased the dividend annually for 59 years. Next is American Express. It continues to endure as one of Buffett's favorite investments. Buffett likes to say that his preferred holding period is forever, and AMEX is one of the premier examples. Berkshire entered the initial stake in the credit card company in '63 when struggling. AMX badly needed capital. Buffett obliged getting favorable terms on his investment. He has played the role of white knight many times over the years, including during the financial crisis, as a means to get stakes in good companies at a discount. Think Goldman Sachs and Bank of America. But no one would have been surprised if Buffett had trimmed his position sometime during the course of 2020. After all, Berkshire dumped financial stocks all year and even trimmed stakes in payment processors during Q2. American Express is both, and yet the position remained fully intact across the year. Berkshire owns 19% of the American Express shares outstanding, is by far the company's largest shareholder. Buffett praised the power of Amex's brand at the Berkshire's 2019 annual meeting. It's a fantastic story, and I'm glad we own 18% of it. A roughly 1,600% total return over the past quarter century would make most investors glow. Number 2 is Bank of America. Buffett spent most of 2020 hacking and slashing at various bank stock holdings, but he remained as committed as ever to Bank of America stock. Buffett's interest in BAC dates back to 2011 when he swooped in to shore up the firm's finances in the wake of the Great Recession in exchange for investing $5 billion into the firm. Berkshire received preferred stock yielding 6% of warrants, giving Berkshire the right to purchase Bank of America common stock at a steep discount. The Oracle of Omaha exercised those warrants in 2017, netting $12 billion of profits in the process. Warren Buffett let go of 2.2 million BAC shares in Q2 of 2019, but that represented a mere 0.2% reduction, and while he cut heavily into various bank holdings in 2020, he actually added to Berkshire's already large position that year by snapping up more than 85 million shares. The stake in BAC is worth more than $41 billion and accounts for 14.6% of the holding company's total portfolio value. Meanwhile, Berkshire is Bank of America's largest shareholder at 12% of its shares outstanding. And then, of course, we've got Apple. Warren Buffett absolutely adores Apple stock, but even he decided to take a little bit out of Berkshire B's stake at the end of last year. Berkshire Hathaway sold off 6% of its Apple stake during the final quarter of 2020, but that likely had little to do with the lack of faith in the iPhone maker. Might as well be, I think of it as our third business. It might as well be even after its Q4 share sales. The tech giant still represents more than 40% of assets in the Berkshire Hathaway equity portfolio, and the Berkshire remains Apple's third largest investor, representing about 5.4% of all shares outstanding. Only Vanguard and BlackRock giants of the massively managed index fund universe hold more Apple stock. The Oracle has only occasionally dabbled in technology stocks, but he bought Apple with 2 fists, and he's more than happy to discuss his order of Apple. And he has said more than once on CNBC he loves the power of Apple's brand and its ecosystem of products. It's probably the best business I know in the world, and that is a bigger commitment that we have in any business except insurance and the railroad. It's like that Buffett is merely taking profits on what has been an exceptionally fruitful investment. Apple shares have returned 494% since the end of Q1 2016 when Berkshire initiated a stake. That is more than 3 times better than the broader market. So guys, those are the top investments of Warren Buffett. Top 5 right now being Apple, Bank of America, American Express, Coca-Cola, and, of course, Kraft Heinz. So, guys, let me know what you think of Buffett's portfolio. Are there any stocks that you really dislike in this list? Are there any stocks that you own and are happy to own? Let me know down in the comments below. Thank you guys so much for watching, and I'll see you guys in the next video. Take care.